The term Ushi-no-eta Junen was first introduced in 2000. In Japanese, it means the lost decade, referring to Japan's period of extreme economic stagnation between 1991 and 2001. 10 years later, the term evolved to mean the lost 20 years, and by 2021, it had again been expanded to the lost 30 years, clearly referencing Japan's prolonged economic stagnation. Between 1991 and 2021, Japan's economy grew at an average of only 1% per year, while during the same period, economies around the world soared. For example, Argentina, country with moderate growth, saw its GDP increase from $200 billion in 1991 to a far greater figure in 2021. So, even as the rest of the world was growing, Japan could no longer keep up. What exactly is happening there, and how did this highly industrialized and developed nation lose its way? In the post-World War II era, Japan experienced a long period of economic miracle and massive reconstruction. Industrialization continued unabated by 1960. Japan had grown more than 350% since 1951. After World War II, the Japanese government focused intensely on developing the economy, and Japan, which once wasn't among the world's largest economies, eventually rose to become the second largest, trailing only the United States. Then, with all this economic growth, the country faced a period of political paralysis. In the early 1990s, a large-scale speculative bubble burst, caused by economic measures taken years earlier. The Japanese stock market plummeted, and at that time, banks and insurance companies were saddled with uncollectible debts. This marked the beginning of a 30-year cycle of economic stagnation. To put the magnitude of this problem into perspective, in 1989, among the 50 largest companies in the world, 32 were Japanese. By 2021 of those 32, only one remains on the list. Moreover, Japanese real wages have been falling since 1997. Research from the Japanese Ministry of Health shows that by 2010, household incomes had fallen back to 1987 levels. The Japanese economy is still recovering from the impact of the 1991 crash and the subsequent lost decades. It took 12 years for Japan's GDP to return to its 1995 levels, and as a major sign of economic malaise, Japan also fell behind in per capita output. In 1991, Japan's real per capita output was 14% higher than Australia's, but by 2011, it had dropped to 14% below Australian levels. Over that 20-year period, Japan's economy was outperformed not only in gross production, but also in labor efficiency, even though it had previously been a global leader. By 2018, Japan's labor productivity ranked among the lowest of the 17 developed economies. In response to its slow growth, Japan has relied on economic stimulus measures, which have resulted in a fiscal deficit since 1991. These measures did not have positive effects on the Japanese economy. In fact, they contributed to a rising debt level. By 2013, Japan had the highest level of debt of any nation on the planet, and more than 25 years after the market crash, Japan still feels the effects of those lost decades. Nevertheless, several Japanese lawmakers have attempted reforms to address the economic malaise. In 2012, after the election of a new prime minister, reform efforts were undertaken to tackle Japan's low inflation, the declining productivity of its workers compared to other developed nations, and the demographic challenges posed by an aging population. By 2020, Japan's GDP had shown its lowest growth since 2012, and to make matters worse, a report from the Japan Center for Economic Research stated that the impact of the COVID-19 pandemic dealt the final blow to Japan's long-troubled economy, halting the recovery that had begun in 2018. Unfortunately, Japan is not in a good place. The country has lost nearly 30 years of economic progress. Economic stagnation has taken hold, and with an aging population and a low birth rate, the prospects for long-term growth are bleak. And that is exactly why Japan is unfortunately economically stagnant.